What's up, everyone? How's it going? Welcome to today's market analysis and trade recap episode. Today is Tuesday, December the 16th, and today we took a grand sum of 0 trades. Today was NFP day, and we'll go over the different ideologies that we saw today. And this might be more of a quicker video simply because, yes, price action really wasn't too great today. Like, just taking a look at the market open wicks, they're pretty aggressive. We're seeing movement, but it's just these wicks that are getting out of hand, and also the order book seems to be very noise filled, and there's not too many big passive order players that are playing directly on the DOM, and because of that, we have to make assumptions beyond what we can see. And I typically don't like to speculate on that unless I have solid bias or solid reasoning behind it. Say, for example, icebergs or very clear levels of absorption within various regions. But before we get into that, let's take a look at our TradingView recap, right? This year we've spent 238 days. Okay, out of the entire year, we've spent 238 days on the charts. Like, not the full days, of course, but for 238 days, we've been on TradingView every day. And that's pretty good, keeping as there are only 252 trading days in a year. So 252 minus 238. We've only spent 2 weeks off the charts in the entire year, or 14 days. And just because it's a trading day doesn't mean it's always tradable to an extent, or doesn't mean that we should be on the charts. Think about how many CPI, FOMC, NFP, and various more days are within a single month. So I'm pretty proud to see this, and I'm looking to keep this type of thing up, potentially even get it much closer to the 365-day mark, right? Even if it's not a trading day, you might still want to look at the charts. So I guess with that being said, let's dive straight into it, right? So I'm going to go ahead and remove my session volume profile. Essentially coming into market open, let's hop on the 1 hour just to give you that depth. But coming into market open, ooh, I didn't, looking in hindsight, right before market open here. I mean, yeah, this might be imbalance below region because there is volume at that area. Let's take a look at where this, let's go on 30-minute and then adjust this. Let's go straight to 8. Okay, perfect. You see this volume node right here? Oh my, yeah, look at the precision that volume nodes provide, right? Like, we see price breaking towards the downside, right? We have this liquidity level right here. Where's that liquidity level positioned? It's positioned right darn in the SPAC center of that low volume node. So do we expect us to necessarily bounce at that region? I mean, perhaps, but realistically, it's not that crazy of a region, right? In the time, like if we break this, eventually we should get to this high volume node if volume is not generated at that region. And we do see that our bottom for the day happened to align perfectly with this volume node that we marked out. Now if we break this, looks to be pretty clear until the next liquidity level. So this region could be a nice imbalance below region. But now we're moving towards more of analysis for the next few days, but let's really focus on what we got at hand today, right? Essentially, right before market open, we swept this lower liquidity, and we did see some sort of bounce from that region. But then we took out this upper liquidity, and then that's where we started to fall. We took out this upper liquidity, started to drop down. Now, if you take a look, this could potentially be considered liquidity. And I mean, we do get a bounce from that. So that's where the wiki action is really playing through. But if you look at the recent overall mini trend, we see that it is towards the downside. So of course the shorts will be preferred, and you can use icebergs and other factors to influence that as well. But simply given, it's quite like choppy. There's a lot of noise, which is not always the greatest factor and conditions to be trading in. Alongside it being the holidays, December price action, but nothing's too crazy. Like, take a look at this. You can clearly see that lots of selling in here, but these sellers are getting absorbed right away upon that market open candle. And at 7, I believe, was NFP, right? Let's see, hold on. Today, right at, when was it? 7:30. 7:30 was NFP, so it would be this candle, not. Okay, I'll have to go into the lower time frame. Yep, 7:30, the NFP news. And again, this is typically, this happens a lot. And I've just been noticing this, and there may be an edge from this, and I can't go into too much detail in case this video blows up in some random occasion, but when that liquidity gets taken, when there's news and we see a clear reaction from it, we typically tend to follow the rest of the day towards that region unless we go up and take that out. Potentially could stand as a target, but typically that sweep at the news can symbolize significance because we pushed up as a result of the NFP release, right? Which was good. It wasn't bad. But right after that, I mean, let's see what happened right here. Right after that, we saw aggressive selling start to kick in and start to follow through. But with that being said, there's still not too much to base it off of. We swept that lower liquidity, started pushing up, took out that liquidity, started pushing down. Right upon market open, we tried to push up, failed to do so, and we continue going towards the downside. But as you can see, just taking a look at these barriers, we should not get it mistaken that we see barriers here through all this orange. Should take a look at the COB as well, simply because you can see that there's not a high standard deviation with it. The standard deviation within it all is pretty low. Or standard deviation is not the right word, because standard deviation is like that. This would be more of a uniform distribution, but essentially all of them are pretty uniform. And when they're uniform, there's nothing really standing out in terms of barriers. And these orange stuff, typically we want them to stand out in terms of the COB and the DOM. So right now there's literally not much passive liquidity for us to play with. I mean, we are seeing the 70 order around 6, 8, 7, 8. But then again, it cannot be put in with too much significance. I mean, we do see it happen. What I'm seeing is icebergs are positive, CVD is negative. That being said, again, lots of noise within the order book, lots of noise within footprint as well. In here, nothing too crazy. We had at 8:45 we had flash manufacturing as well, thus the increase in volume here that we've seen in these two candles, and it's a very big buying right there. Now this is starting to cluster up a tad bit more, potentially leading to that sell side understanding, potentially taking out that 5-7 region heading lower. Down here, if you see the absorption, but I mean, we literally head into it. and then we quickly flush down right before the end of the candle. Am I tripping? That's 840. Okay, makes sense, makes sense. And we're still moving forward. Again, nothing too crazy. We have this 6845 region that might get taken out. Almost didn't get taken out. But it looks like we will head down to that near 6845 and then reverse. But this is all news information. You can skip forward a bit. But really, the order book isn't too great in terms of passive orders. And passive orders are really what we need to gain that sustainable edge, in my opinion. For our strategy, at least. Nothing too crazy that I'm seeing within all of this. Seems to be just normal market making activity, but I do see that that 6900 region does hold some sort of significance. So we may be tempted to head up there to that 6900 region up here. Up here, yeah. Very high up, but we don't get there. I think I remember like seeing if longs were gonna come here from 9 a.m. simply because we saw this big selling come in and then us pushing up all the way there. But what candle was that? It was a 5 candle. We push up, there's a lot of liquidity. Essentially, the conditions are not too optimal. Now this 6845 region does seem to be pretty good at 1020 down at this area. And let's see. We had we can't even go to the 1 minute here, but potential shorts may be in play here. Icebergs gone negative. Icebergs have gone negative. 74 barrier here, much higher than this liquidity, and clear area of target down here at this 4-5 region. We have imbalanced risk to reward, right? We're good in that sense. So this would low-key be a gaugeable trade at that 19 candle. So this candle right here. And 52.5. Let's just hop onto the 1 minute simply so that we can actually see. Then that 19 candle, right? Yep. 52.5. This is a great entry. We're targeting for 5.5. Stop loss. Stop loss would probably be around 57.5. There. So I mean, a safe trade would be this 1.4 risk to reward shorts here, simply a continuation play, and this one would be a pretty good trade, I'm not gonna lie. 2.5? No, we don't. Yeah. I mean, this is This stood out to me clearly with that liquidity imbalance and barrier showing support with the icebergs. Now, one more thing that would have made this really good is that if on the footprint we started to see some either seller accumulation near the top or buyer absorption, that could be a really nice signal for those shorts. Not seeing anything crazy here. Two head up, we're taking out all that liquidity. Aha, right here. Take a look at how the liquidity is behaving right now, and this is 1036, so right here. What do we notice? We notice that there's a big stack of passive sell orders sitting right at VWAP, which also tends to be a region where dark pool orders are placed, which are essentially hidden versions of these orders. Now, our icebergs, they are positive, nothing too significant though. CVD is still negative, but the main thing is that we're seeing this selling action. Now, this, I'm gonna say I'm not going to enter short here, but I am gonna say that I would believe that price may head lower if we're unable to push through this liquidity. And if we head lower, we would head lower at least to the 6840 region, but realistically, yeah, I mean, there's no real crazy targets below, so this wouldn't be the worst play to gauge, but this would be asymmetrical risk reward that is not in our favor. So again, likely would not have taken anything there. That being said, this is a factor which you can consider, and as you can see, it does happen to work out really nicely. Let's keep moving forward. Now the liquidity book seems to be very bare, and our only liquidity seems to be up at that region. And here it looks like seller absorption is happening to an extent. No liquidity for me to base this off of though. Break through that region with the big buys right at that 5-0 region right here. Start to push up. See big selling there, match that big buyer. Now there's two clear, oops. Okay, now there's two clear blocks, right? One from 6-7, okay, sorry. One from 5-7 to 6-0 and one from 6-2 to 6-5. Right below 6-7.5. And we are seeing some buyer absorption at this region, so honestly, this could be some longs position. This could be a decent position for some longs as well. I mean, realistically, it's not the best of plays, but this is more of like a testing play in hindsight. Place to stop under all that absorption. So let's just see how this would work. So in that 50 candle, 950. Nope, never mind. We would have got absolutely demolished. Yeah, we would have got cooked. I mean, that's why we would not have taken it. That's why we're testing these things out. But essentially, we were trying to enter longs at around 53.5 or 53 with a stop at right below 50, so like 49, targeting right under 60, so something would be like that. And I mean, it does technically happen to work out in the end if we had a unbalanced risk to reward, it would have worked, but we don't have unbalanced risk to rewards in the opposing side for a reason. And the shorts start to drop. But again, this would be a decent area for those shorts once again, because look at all this buyer accumulation and absorption that we're getting here. Lots of buyers entering in within this entire range, and previously we've seen really big sellers enter in at 9 a.m. right around this region, and potentially right at or similar to that region where we've seen a lot of volume, which might actually be the session volume profile. Let's see, 6-0 region. Yeah, I mean, our point of control right before that, it does seem to be higher, close to the area where we rejected. I mean, it's not pinpoint accurate, that's why I'm not going off that too much. But you do see that there is a region of volume where we've seen this transaction occurring. Now we're seeing seller aggression too, like just take a look at that. It's like forcing these sellers to come in. So icebergs are towards the downside, CVD is towards the downside. If buyers are unable to play at this region, I don't see a reason why we shouldn't continue towards the downside. Buyers are struggling at that region as well. Right around VWAP. Take out that region. I mean, liquidity book seems to be very bare at this region, so I'm honestly not seeing too much, right? Yeah, I mean, right at that time though, gets really seeing very big sell aggression enter in, and as you can see, those sells got absorbed and we bounced back up, and then we ultimately continue going down again. But essentially, that's gonna be all I have here for today. Potentially, we could have won this trade, maybe lost this trade if we've tested that out in the real markets, but if we took any trades, this trade would have worked and was pretty smart as well, simply using logical reasoning. But yeah, I mean, that's basically all. If you have any questions, feel free to leave a comment down below or join the completely free Discord server, which is linked in the description. Also, if you want to check out the order flow tools which I use on a day-to-day basis, you can check those out too. Bookmap Livestream and Addis Charts, one of our channel partners. Both of them have lots of free functionality, but as always, feel free to, and as always, please do your own research. With that being said, that's all I got, and I'll hopefully see you guys tomorrow for the next market analysis and trade recap episode. I'll see you guys then. Goodbye.